Welcome everybody. We're here for a very special video to bring you guys up to date on some breaking news changes that are coming. And I wanted to invite a very special guest on, Gary Masur, who's a regional sales manager with TD. And Gary, you manage a team of 21 mobile mortgage specialists.
Yes.
Who we work very closely with, our partnership with TD at CIR Realty here. And Gary, we wanted to have you on, and we didn't get a lot of time to prepare for this, and we're learning more information as it comes. But can you tell us a little about what these mortgage changes are that everyone are talking about?
You bet. Thanks, Lindsey. I appreciate the opportunity to do this. And we are, I have to state, we're still struggling. We haven't heard from CMHC or Genworth on details of this. The government has announced it, and now we're left to figure it out.
Right.
So it's an uncertain time. But first and foremost, what I wanted to say was the sky's not falling, okay? The sky is changing. There's no doubt about that. We can't ignore it. But the sky's not falling.
Awesome.
So the important thing there. Now, what we're saying is that one of the key change is that as of October 17th, any client in Canada who's applying for a mortgage and putting down less than 20% of the purchase price, it's a high ratio mortgage, and the rate that they have to qualify to be able to afford to make the payments is now changing. Previously, they could qualify on a 5-year term at whatever rate they got, say 2.39%. Now they must qualify on the Government of Canada prescribed rate, currently 4.64%, so a significantly higher rate.
But the clients don't actually have to pay 4.64 on their mortgage. They are paying the rate.
Right.
They're just doing what's called stress testing to say, you know what, if rates were to rise, this person can still afford to make their payments.
Right. Absolutely. Good point.
So give us an example of what this means for a typical consumer.
Absolutely. So I'm a simple guy, and I look at it and I say, okay, generally, a client that today could qualify for a $400,000 mortgage, maximum, high ratio mortgage, after these rules take effect, they're going to be able to qualify for about $320,000. So it is a significant change. Another thing that I wanted to the timing I wanted to add in was the fact that between now and before October 17th, as long as the deal is approved by one of the insurers, CMHC or Genworth, they can qualify under the existing or old rules as long as the deal funds by March 1st, 2017. So we do have a small window of opportunity there.
Right, so call it 10 days from today,
Yeah.
Today being October 7th. So you got to get the deals in and get obviously the qualification process. So that's the step that happens before a transaction goes firm,
Right.
that they get the approval from CMHC, and
Yes.
all of those will slide in under the existing rules.
Yes, my understanding is that pre-approvals are not, this isn't talking about pre-approvals, this is live deals that we submit.
Okay.
To the best of my understanding.
Okay, excellent, excellent. So now a consumer who is losing some purchasing power, obviously they have some choices they can make. Number one, they can choose to buy a home at a lower value, or they could also get a cosigner or something else like that, true, to bump up their purchasing power. Is that correct?
Absolutely. Yep. And it's more when many clients, when they're coming to us and they're looking to purchase a house and obtain a mortgage, there's more to it, and that's TD can do that. Are we going to, maybe they have a couple payments that the amount is not high that's owing, but the payments are fairly high. Maybe we can give them a consolidation loan, put that all in, and then the monthly obligations are lower, so that allows them to qualify for more. They can look at a cosigner. That gets a little tricky, so that's a face-to-face discussion we need to have with the purchaser and the cosigner. Very important there. Another one that, and I don't want to get too technical, but the rule is the minimum equity is 5% that a client has to come up with from their own resources, and that includes a gifted down payment. Now, there are going to be situations where maybe a client maybe they can come up with 15%, right? Now, 15% is less than 20.
Yep.
I'm not a math major, I know that. But we could say, okay, you don't qualify, but if you could borrow either a loan, line of credit, or bank of mom and dad, another 5% to make this a non-high ratio or conventional deal, then we could qualify them under much more generous qualification rules.
That's a great point, and even more, one of the things I like is obviously you guys' creativity to come up with things. It's going to be that much more important from a realtor standpoint to introduce someone to a mobile mortgage specialist from your team to talk about specifics. Gary, we actually had you had some optimistic numbers for what you believe your team will be doing in 2017. Share those numbers with us.
Absolutely. Thank you for that opportunity. So I'm going through our planning process for 2017 because our fiscal year starts November 1st. So on Tuesday morning, I have to present to my boss, my entire team, and myself present our plan. So our plan is for a 10% increase, and I hit my goal. So I'm predicting a 10% increase, and that's going to mean that myself, through my team, are going to approve over $500 million in mortgages in fiscal 2017. So I'm pretty proud that my team can do that.
So I mean, you're going up the chain, and obviously you're willing to put your I guess money, you're willing to forecast your goals based off this new information, which I think is a true testament to the fact that the sky isn't falling.
Absolutely.
So obviously, TD being a huge brand, fantastic brand, aligning ourselves with you guys is something we've always appreciated. But I hope that the realtors understand now how important it is to have a battleship, as you say. Tell us about this.
So this is a saying, and we brought this, you know, I'm bringing it out again, but really in the 2007-08 crisis, we were there saying, hey, in troubled waters or in rough waters, you want to be in a battleship, not a canoe, and so TD, it's the TD battleship. We're open for business, we continue to lend in Alberta, and we're not pulling back on our offerings or premiums. I've seen a lot of emails flying the last couple days about other institutions making changes. We're not. Obviously, we have to follow the government rules, but other than that, we're open for business, and we're here to work with people to make sure that they can get into a house that they want.
Awesome. Gary, thank you so much for your time. Realtors out there, you guys do have a window that a deal needs to be written to fly under these criteria, but even as October 17th comes and goes, there's still tons of options on your clients. Your clients got to be realistic and make sure that you know, they're not going to be house poor moving into this, and that's obviously the government's plan here, is to make everyone a little bit more savvy in terms of how much they leverage themselves. But I really want to thank you for coming in last minute to give us the up-to-date information. Now, October 24th, we have Gary co-hosting CIR Live, and we expect to have much more information at that time. These rules will already be in effect. We'll be able to kind of see how it shakes out, so we'll be presenting some more information on that at the time. Gary, thank you so much for your time
Awesome.
and joining us today.
Yeah, appreciate it.
Awesome. Thanks.
Have a great weekend.